Hello all of you, I hope you are doing good. Today we are going to do the revision of account standard 25, that is interim financial reporting. Okay, so what it says that first of all, what do you mean by interim financial reporting? They didn't say that here interim financial reporting is for the 3 months, 6 months, 9 months. No, they say interim period means which is shorter than a full financial year. So it may be quarterly, it may be 6 monthly, it may be 9 monthly. So they say what is the interim period that is shorter than a full financial year. This accounting standard 25 talks about that how to do the presentation disclosure and then the measurement and recognition in an interim financial reporting. So what we'll do that we'll discuss one by one. There's so many things I'm going to discuss with you. First, introduction, then definition, interim report, interim financial report. What should be the content in the interim financial report? Then complete set of financial reporting, condensed interim financial reporting. Period for which interim financial statement are required to be presented, applicability of AS 25 to interim financial results, recognition of item in interim financial statement, first income earned or expenses incurred in interim reporting period, income tax and other special cases, change in accounting policy, change in accounting estimate, and gratuity and defined benefit plan. So we'll start with that here with the introduction part. What it says that here now, standard set of the minimum content from the for the interim financial report. What is interim financial report? First of all, which is a shorter. It is not a financial statement for the whole year. We are preparing a financial statement which is less than the whole year. It might be 3 months, 6 months, 9 months, whatever is that. Okay. They say defines the principle for recognition and measurement in interim financial statement and are the stakeholder understanding of earning, cash flow, and the financial condition. Obviously, quarterly also we will come to know that how the company is performing. So what is the difference between the annual financial reporting that is for the full financial year? So they say here the financial statement are prepared for one full financial year. Example, from 1st of January 26 to 31st of March 27. Interim financial reporting that which is deals by AS 25, which talks about financial statement are prepared for a period shorter than a full financial year. So it might be 6 months, 3 months, whatever. So for example, from 1st of April 26 to 30th of June 26, 3 months here. Okay. Now two things. First definition, what is interim period? As I already told you that here, a financial reporting period which is shorter than a full financial year. What is interim financial report? A financial report that which is comprising the either a complete set of financial statement or a condensed. So we will see that here now. When they talk about that, when we prepare interim financial reporting, we are going to present the financial statement, the P&L account and balance sheet, but which is not for the whole year. For example, if you are preparing a 30th of June, that is for just that quarter. So that financial statement may be complete. It means in detailed version, but maybe condensed also. Okay, compressed version. We'll discuss that. What should we, if they have the option, they can go for the complete set of financial statement or a condensed financial statement. So what should be the content in complete set of financial statement and what should be content in condensed financial statement? We'll discuss that. Now for interim period. Okay, during the first year of operation, if the annual financial reporting period is shorter than the financial year, that shorter period is not considered as interim period. Correct. For example, we started the business during this year only. The financial year is from, for example, 1st of April 26 to 31st of March 27. We started the business on 1st of July 26. So it is going to come for how many months? 9 months. So first financial statement I am to prepare for 9 months. That is not the interim financial reporting. Why? Because we started the business year only. So it might happen for the first year, my financial statement might be less than the 1 year and we are not going to call them interim financial reporting because we started the business during the year. Okay. That's why we have not completed 12 months. So at the end of the financial year, it might be a 9, whatever, less than 12 months it will be happen and we are not going to call them interim financial reporting. Now, what should be the content in the interim financial reporting? So depend that either we can go for the complete set of financial statement or we can go for the condensed interim financial reporting. So they say if it is a complete set of financial statement, if a complete financial statement is presented, it should be adhered to the requirement applicable to annual financial statement, including notes to account. Like exactly like the schedule 3, like the way we present the financial statement for annual financial statement, in the same manner we have to prepare the interim financial reporting. But we have the option that we can go for the condensed interim financial reporting. They say an interim financial report should minimally that include condensed balance sheet, condensed statement of profit and loss account, condensed cash flow statement if the enterprise present in the annual financial statement, and selected explanatory notes. So basically, we are still going to prepare the P&L account, cash flow, and balance sheet, but selected explanatory notes, not like a detailed notes to account that we do in the annual financial statement. They say note. Condensed statement should include at least the heading and the subheading from the most recent annual statement. Whatever the financial statement that we have prepared, whatever the heading and the subheading, in the same manner, the format will be same. The balance sheet, P&L account, non-current liability, current liability, shareholders fund, current asset, non-current asset, statement of profit and loss account, like that. Okay. But they say include additional item or notes if their omission would mislead the statement. If you want some additional, you can add it that here. If you think so that if we don't add the additional item that additional heading, it might mislead to the use of the financial statement. Okay. But what is more important that here now, they are saying we are not preparing for the whole year, we are preparing for a shorter period. So we may go for the complete, exactly like the detailed version that we do in the schedule 3, or we may go for the condensed that, not a detailed version, but a small version of it, but heading and subheading should be the same. Now, the fourth part, what it says that a period for which the interim financial reporting are required. Now are to be presented. Now understand, we are preparing the interim financial, for example, the third quarter, that is on 31st of December 2027. When we are preparing 31st of December 2027, remember these date in your mind. And the previous financial year was from the 1st of April 26 to 31st of March 27. So for which quarter? Third quarter. That is we are preparing on 31st of December 2027. Okay, the interim period and on 31st of December 27. What was the previous financial year? 1st April 26 to 31st of March 27. Now, when we prepare the interim financial reporting that now, we have to present the current period as well as the comparative period, the previous period also. Now understand this one. When it comes to the current period, that is what they say when you talk about the balance sheet. So, and the interim, on which date my interim financial reporting is going to end? 31st of December 27. So, my balance sheet date will be balance sheet as on 31st of December 27. But for the purpose of comparison, we are not going to present the balance sheet of 31st of December 26. No. We are going to present the latest financial, the balance sheet we have, end of the immediately preceding financial year, that is 31st of March 27. So, we are interim period on 31st of December 27. So we will write it on balance sheet as on 31st December 27. But for the purpose of comparison, don't present the 31st December 26. Latest financial year end on 31st of March 27 of that date. When it's come to the profit and loss account, so we are to prepare for the quarter. The quarter starts 1st of October to 31st of December. So we are going to prepare here on 1st of October to 31st of December. Okay. For the purpose of comparison, we will give the exact date of the previous year. So here, 1st of October 27 to 31st of December 27 for the purpose of comparison, 1st of October 26 to 31st of December 26. But they say on a cumulative basis also. This year start on 1st of April 27 to 31st of December 27. Similarly for the previous period also, 1st of April 26 to 31st of December 26. That okay, for this particular quarter. Comparison previous quarter, the previous period, same quarter, cumulative basis, current year starting to the end of the interim period, same period for the previous year as well. When it's come to the cash flow statement, this is on the cumulative basis only, that is from the 1st of April to 31st of December 27, and for the previous period, that is 1st of April 26 to 31st of December 26. Okay, now I'm coming to the fifth part, that is this applicability of accounting standard interim financial result. Remember that I'm not saying interim financial reporting, I'm saying interim financial result. Certain time what happens, the Companies Act, they say you have to report to, not to all the companies, to certain company that year. There's some clause which say you have to prepare the interim financial result, you have to report that year. So should they follow the AS 25? They say AS 25 is going to follow for the recognition and measurement purpose for those results. But the way the Companies Act say you have to present them, we have to present them for like in the same manner. So we are talking about the interim financial result. These results made mandatory on some company. They have to report to the Ministry of Corporate, to whoever. So they have to present in the same manner which is mentioned in the Companies Act. Now listen carefully. What they say that now? Condition for application. They say applies AS 27, presentation and the disclosure if an enterprise present interim financial report as defined in AS 25. Now, exclusion from for other interim financial result, presentation and disclosure requirement AS20 are not mandatory for an interim result, not meeting the interim financial reporting definition. Example, it will be easy for you to understand. They say quarterly financial result under the clause 41 of the listing agreement are not considered interim financial report as per AS29. They are talking the result. When they say interim financial result, results what is profit or loss. Okay, if it is mentioned in the clause 40, example 41 of the listing agreement. Okay, so what is going to happen is that they will follow that agreement that here. Okay, for the purpose of presentation and disclosure that. However, how to recognize the item that year and how to do the measurement for that AS25 will applicable. But what is the normal rule when we prepare interim financial reporting? I am going to follow this AS for the presentation, disclosure, recognition, measurement. Okay, but if there are some different law, they say that you have to show the result. List, for example, the clause 41 of the listing agreement. In that case, how to do the presentation and disclosure? I will follow whatever the clause 41 of the listing agreement tell me that here. But how to do that recognition and measurement for that AS25 is applicable to me. Okay. Now, basically, they are saying AS is not applicable if there is separate law which talks about the presentation and disclosure, like the clause 41 says that. So I will follow that, no problem. Obviously, law is overruled. It is a contradiction between the law and AS. We have to follow the law. Okay, now very important discussion. We'll do that now. On this question is going to come in examination. So what it says, recognition of item in the interim financial, the statement that. What it says that here now, the first is that. First of all asset, liabilities, income and expense are recognized in the interim financial statement using the same principle of accounting as we follow for the annual financial statement. First, income earned or expenses incurred in interim financial reporting. Now listen carefully. What it says that here now, recognized completely in the interim period in which they are earned or incurred. Expenses should not be deferred to the upcoming interim period on the basis that the sales will be more in the upcoming interim period. We cannot say that here. When we recognize the income and expense in whatever that the period they have incurred or earned, we have to recognize in that period. We cannot say that no, that the sales we have more sales in the third quarter, so recognize the expense in the third quarter more. No. This is whenever you have earned or incurred, you have to recognize in that particular period only. So it says example that here, bad debt, advertisement, sales, promotion expense, depreciation, employee benefit expense, finance cost, administrative and selling expenses, extraordinary loss or gain, then a loss or gain on the sale of investment, dividend income, etc. Whatever. Incurring an interim period should be recognized in that particular interim period only that year. This will not be deferred to the upcoming. We cannot say no, I will recognize in the subsequent period because there is more sales, I will recognize the more expenses. No, it's nothing like that. Whenever you incurred expenses, recognize it. Whenever earn the income, recognize in that particular period. Let's take one question on it. Come to question number 79. Now they say Sincere Corporation is dealing in seasonal product. Now they are dealing in seasonal product. It doesn't matter that seasonal product like the umbrella, there are more sales in a rainy season. So it doesn't matter that here. Okay, like somebody said the crackers during the Diwali, okay, there's more sale of that. That doesn't matter that. Whenever you have incurred the expense, when you earn the income, recognize in that particular period. That's it. So this is sales pattern of the product quarter wise is as follows. First quarter on 30th of June, they have 10% sale. Second quarter, 10%. Now third quarter, they have huge sale, 60%. And here's the 20%. If you do the total, that will come here 100. Okay, that will come here what 100 that here. Now what is going to happen now? Information regarding the first quarter, they are asked first quarter 30th of June 2021 is as follows. They have a sales of 80 crore. They have a salary and other expenses 60 crore, advertisement expenses 4 crore, and the administrative and selling expenses for 8 crore. The total expenses that they have 72 crore and the sales they have the 80 crores, 80 minus 72, that will come 8 crore. They have a profit that they have. Now they tell us that now, while preparing the interim financial report for the first quarter, Sincere Corporation wants to defer. Defer means the delay, extend. Okay, forward is next. Defer rupees 10 crore expenditure to the third quarter on the argument that the third quarter is having more sales. Therefore, the third quarter should be debited by more expenditure. Considering the seasonal nature of the business and expenditure are uniform throughout all quarters, calculate the result of the first quarter as per AS25. Also give comment on the company's view. So what they are telling us that here now, they are telling us that now, they are arguing that they are saying that whatever 72 crore is the total expenses, they say out of that 10 crore should be recorded in the third quarter. They are giving the excuse. What they are saying? They are saying as they have a more sales in the third quarter, so out of the 72, or they want us to defer the 10 crore to that third quarter. Is it the argument correct? The answer is no. What AS25 say? It doesn't matter that whatever sales, they whenever incur the expense, you have to recognize in that particular quarter. So the profit is going to come here 8 crore, and they have given the explanation. According to AS25, the income and expenses should be recognized when they earn and incurred respectively. Therefore, the seasonal income will be recognized only when they occur. Thus, the company's view is not as per accounting standard 25. Now come to here, the second point, what's it, that is related to income tax. This is, now understand the logic, what the points coming against 25 related to this income tax. For example, that I have a, they say, suppose the law say, example say, this is slab rate. They say for the initial rupees 4 lakh, the rate of tax is 0%. So what is the amount of tax? 0. And suppose I have estimated total profit that I have 10 lakhs. So on the first 4 lakhs, suppose the slab rate say no tax, example. And on the exceeding the 4 lakh, the rate of tax is suppose 20%. The total profit, expected profit, I have 10 lakh. So on the 4 lakh, the rate of tax is 0. On the remaining 6 lakh, the rate of tax 20%. If I take the 20% of 6 lakh, that is coming 1,20,000. So there is one problem here. Now I am going to charge the 1,20,000 as the amount of tax. But suppose I have a profit during the first quarter 3 lakh. So I will say no rate of no tax, because on the initial 4 lakh, no tax. But it is incorrect, because for that quarter there is no tax, and the remaining quarter the tax will come that year. So they say it's better to take the average. So I have estimated income of the 10 lakh. I have estimated the tax 1,20,000. I will take the average. So 1,20,000 divided by 10 lakh, that is coming 12%. Now suppose if I have now in interim financial reporting, suppose we report in the first quarter, let's say that is 3 lakh. So I will take 3 lakh multiply by 12%. I will take average. Now for the remaining quarter we have 7 lakh. So 7 lakh multiply by 12%. We are not taking any slab rate. What we are saying, we just have to take the average rate of tax. We have to calculate weighted average rate of tax, and accordingly we will distribute. So here it is coming that if you do the total that here, that is going to come. Okay, what happened? Okay, if that is going to come here. Now 3 lakh multiply by 12%, 36,000. 7 lakh multiplied by 12%, that is coming 84,000. If I do the total here, that is coming 1,20,000. Here also 1,20,000. But it is a proper distribution of the tax, that is. So we have to take the average rate of tax. What are the steps? 3 steps. First, calculate the estimated annual tax on the estimated annual income. I have annual income of 10 lakh. Annual tax estimated tax is coming 1,20,000. Okay. Calculate the weighted average rate, that is coming at 12%. So estimated annual tax, that is 1,20,000. Estimated annual income, that is 10 lakh multiplied by 100. That is coming in our example 12%. Third step, that here, calculate income tax expense in each interim period. Simple. What are the profit or loss in that quarter, multiply by average rate of weighted average tax rate. Simple. Okay, let's take a question on it. Now come to question number 80. They say, now what it say that in question number 80, yes, question number 80. They say an enterprise that here reports quarterly estimated annual income of rupees 10 lakh. So they have annual income of 10 lakh. Assume the tax rate on the first rupees 5 lakh is 30%. So on first 5 lakh it is 30%. 30% that is coming 1,20,000. And on the balance income at what? The 40%. Okay. On the balance income, the different rate of tax. 30% and what? The 40%. Okay. So we calculate the estimated quarterly income. We'll come to quarterly income later on. First is how much is the tax? First step. The first step, 5 lakh multiplied by 30%, 5 lakh multiplied by 40%. So the total tax is coming 3 lakh. Step number 2, the average rate. So 3,50,000 divided by 10 lakh multiplied by 100, that is coming 35%. We just have to apply the 35% that year. We just have to apply what? The 35% that year. So when I say we just have to apply the 35% that year now, so that 74th quarter, they have given the quarter wise income, 75, 2,50,000, 3,75,000 and 3 lakh. So we just have to multiply with the 35% with the average rate of tax, 35%. This is 35%. So this is what the 3,50,000, still it is coming 3,50,000 here. But what happened? We have average, so we have allocated over all these 4 quarters. Very simple. What is the first step? Calculate the total amount of tax. Second, average rate of tax. Then apply that average rate of tax to the quarterly profit that day. Okay. Now come to here the question number 81. The accounting year of X Limited ends here on 30th of September 2021. So accounting year they end on 30th of September. Okay. And it makes its report quarterly. However, for the purpose of tax, year end on 31st of March every year. For the accounting year from 1st of October 2020 to 30th of September 2021, the quarterly income as follows. Understand this one. As per the tax law, financial year end on 31st of March. As per the accounting that here, their financial year end on 30th of September. So they have given the quarter wise the income that they have. The first quarter, that is 31st December 2020, 200 crore. Then second quarter 200. Oh, all quarter 200, 200. Okay. They say actual, that what it says that here now, the actual average actual tax rate for the financial, already they have given us the average actual rate of tax that here. Now for the year ending 31st March 21 is a 20%, for the financial 31st March 20, 30%. Calculate tax expense for each quarter. Now understand, already they have given us the average rate of tax. Now they have the different tax for the different financial year as per the tax law. So as per the tax law, financial end on 31st of March. For that year, now for 2 quarters coming that particular tax period, that is coming how much? 20%. This is the average rate already given for that particular period. So no need to calculate average that year. But as per the tax law, year end on 31st of March. My year end on 30th of September. No problem. Till 31st of March 21, what is the tax rate average? 20% given. We will apply that. Now for the financial year 26-27, as per the tax law, average rate already given 30%. We will apply that. Simple is that. We just have to multiply by 200 crore. We just multiply by 20%, 20%, here 30%, 30%. Okay. Now the last discussion, that is special cases, to understand is these 2 points are important. Change in accounting policy and change in accounting estimate. That is. Listen carefully. Whenever there is a change in accounting policy, for example, we are in third quarter. Okay. Now there is a change in accounting policy. So we don't have to give the effect of all the quarters interim financial reporting 1, 2, 3 effect in the third quarter. No. If there is change in accounting policy, we have to give the effect of third quarter only in that interim. What about the previous two? We have to give the retrospective. I mean to say, for the interim financial reporting 1, 2, we will restate it. We will change it that year, but not their effect. First quarter, second quarter effect is not going to come in the third quarter. Only related third quarter will come. We will retrospective effect means we'll give the effect to the first and second there. I'm not going to change the figures that day. So in the third quarter, I'm going to effect only to my third quarter. But when there is a change in accounting estimate, suppose there is a change in accounting estimate in third quarter, we are going to effect of all the items, or even for the quarter 1 and 2 items, we are going to effect in the third quarter. Change in accounting estimate, change in accounting policy. Suppose we are doing the change in the third quarter. Change in accounting policy, only that relative third quarter I am to record in the third quarter interim period. Whatever change in accounting estimate, all the previous period also effect is going to come in the third quarter. You got the point? Now, this is not so important. The third point is gratuity and defined. You know, according to AS 15, that is, we have to do the actuarial valuation. That is. So for the interim financial reporting also, we have to do the actuarial valuation. The answer is no. We have to take the base for the actuarial, the valuation that they have done on the 31st of March only. If there's some major changes, for that we have to do the adjustment of the significant market fluctuation one time even. But in general, we are going to take the same base, whatever the actual valuation have been done for the 31st of March. So the most important part is change in accounting policy, change in accounting estimate. When it is a change in accounting policy, only related to that particular quarter will take effect. When it is change in accounting estimate, previous period also is going to effect come in all in third quarter. So what you can do, you can pause the video. All these examples, what you can do that you can pause the video and write it down. You can pause the video and write all this in your Rapid Gist book. That's why this book is very unique book that here. That is going to help you multiple time revision that here. Okay. Now come to Super 100 question. Now come to question number 82. Very important from examination point of view. What it says that here, Antarvarti Limited reported net profit before tax of rupees 4 lakh for the third quarter. How much profit that they have for the third quarter? They have a profit of how much? 4 lakh. So I have written 4 lakh here. Okay. So we'll read one by one and accordingly we have to give the treatment. Dividend income of rupees 4 lakh received during the quarter has been recognized to the extent of 1 lakh on the UI. If you have received the 4 lakh in the third quarter, you have to recognize the complete 4 lakh, not crore. If you have received 4 lakh, so it is the income of that third quarter. It is earning the third quarter, recognized in third quarter. But they have recognized only 1 lakh. No. They have to recognize complete 4. So instead of 4, they have recognized 1. So additional 3 we have to recognize. So profit will be increased. It's an income. So we will increase the profit by 3. Now second point. 80% of the sales promotion expense, that is 15 lakhs incurred in the third quarter, has been deferred to the fourth quarter as the sales in the last quarter is high. No. They say the total sales promotion expense they have. How much sales promotion expense there? 15 lakh. They say 80% they have deferred it to the next period. They should not defer it. If it says promotion expense you incurred in third quarter, record in third quarter. But they have deferred 80%. It should be recorded. 80% also we have to recognize that. 20% they have already recognized. They're talking about the 80%. If I take the 80% of 15 lakhs multiplied by 80%, that is coming 12 lakh. So these 12 lakh expense were here. Still, these 12 lakh also we have to recognize in third quarter. Then our profit will go down. So that's why it's a negative figure. Okay, expense negative figure 12 lakhs. Now they say in the third quarter, the company changed depreciation method from W2V to SLF. Remember, as per accounting standard 10, change in method of depreciation is a change in accounting estimate, not change in accounting policy. So when I say it is a change in accounting estimate, all the effect we have to given in the third quarter only. Okay, so they say now, as they say, which resulted in excess depreciation of rupees 12 lakh. The entire amount has been debited in the third quarter, though the share of the third quarter is only 3 lakh. They are saying that due to change in accounting estimate, excess depreciation that they have charged in the third quarter 12 lakh, but for that particular, they say only 3 lakh is the proportion. Proportionally 3 lakh coming for that quarter. But what is the total? 12 lakh. And they recognize 12 lakh. So they didn't say that they recognize 3. They recognize 12. They recognize the entire amount has been debited. So when they say the entire amount has been debited, they recognize all the amount due to change in accounting estimate. Correct. So as per the AS 25 also we have to give all, we have to record in third quarter. The treatment given by them is the correct treatment. So no need to do any changes here. Correct treatment. That's what it dash here. Now rupees 2 lakh extraordinary gain it is. Okay, extraordinary gain received in the third quarter were allocated equally. Why allocated equally? Already told it is doesn't matter extraordinary, whatever is that here. Whenever you earn, recognize it. Whenever you incur, recognize. That's it. So they say 2 lakh extraordinary gain that there, but they have third quarter was allocated equally to the third and the fourth quarter. Okay, understand. They have recognized how much? 2 lakh gain. This equally means to the third and the fourth quarter. So in the third quarter and the fourth quarter. Third quarter they recognize 1, fourth quarter they are going to recognize 1. No, but the complete 2 they have to recognize. Out of 2 they have already recognized 1 in the third quarter. They say equally means 1. Okay, so equally 1 in the third quarter, 1 in the fourth quarter. Okay, so what about that here? What will do that here? That 1 that they are going to recognize in the next. No, they should recognize now. That's why it's a gain. That's why increase the value by the profit by 1 lakh. Okay, next. Then this is a cumulative loss resulting from the change in method of inventory valuation. For example, FIFO to weighted average, okay, AS2, which was recognized in the, first of all, what is the change in, it is a change in accounting policy. Change in method of depreciation is change in accounting estimate. Change in method of the inventory, that is change in accounting policy. Remember this, okay, it's a change in accounting policy. So we are going to recognize only related to that particular quarter. So what is going to happen now? The third quarter is how much? 3 lakh. Out of this 1 lakh relate to the previous quarter. No. What they are saying that now, they say only related. Okay, they say cumulative change in accounting, the cumulative loss resulting from change in method of inventory valuation were recognized the third quarter of rupees 3 lakh. They have to recognize complete 3 lakh. But out of these 3, they say out of this, okay, no, sorry, it's a change in accounting policy. They have to recognize only related to third quarter. So total due to change in accounting policy, difference is coming 3 lakh. But out of 3 lakh, they say 1 lakh is related to the previous quarter. So that 1 lakh will not come here. Why? Because the change in accounting policy. Out of 3, 1 is related to previous period. We are going to recognize only the 2. But we have recognized expense that here. Now, how much recognize the expense that they say loss? We have recognized the loss, how much here? 3 lakh. But we have to recognize only 2 because 1 is related to previous period. Now we are reducing the loss. So if you're reducing the loss, profit will increase. So that's why is a positive figure 1. The last one, sale of investment in the first quarter resulted in gain of 20 lakh. The company had apportioned this equally. In the first quarter, they say. In the first quarter. So what they have done? 5, 5, 5, what they have done. But the correct treatment is to complete the 5 in the first quarter only. That because you made a gain in the first quarter. But we are talking about the third quarter here. So this third quarter, we have recognized the gain. It should not be recognized. It should be recognized first quarter only. So these 5, we are going to reduce that. Gain it is. So profit will be reduced that here. Negative 5. So if you do the total, this is coming negative 8 that here. You can see that here. Now 7 marks is here. Okay. So very simple. Now we have done with the accounting standard. That is accounting standard is 25. 5, that is interim financial reporting. Okay, so now we are done. Just in 30 minutes we have covered the entire accounting standard 25, that is interim financial reporting. That's for today. Take care all of you. Bye bye.